Since the 2008 debut of its first roadster, Tesla has not looked back. Over time, many of the company's detractors have been shown to be incorrect. It is widely acknowledged that Tesla has expedited the automotive industry's shift from internal combustion engines to electric automobiles. The startup is already challenging the supremacy of legacy automakers, which has lasted for 10 years. Let's examine where Tesla could be in a decade. Tesla sold 499,550 electric cars in the previous year. It anticipates a 50% average annual growth in delivery over a number of years. At the moment, it runs 2 factories in Shanghai, China, and Fremont, California. Additionally, it is constructing 2 new factories, one in Texas and one in Berlin. Between 2016 and 2020, Tesla's deliveries grew by an average of 65%. The maker of electric vehicles saw an increase in annual deliveries from 76,230 in 2016 to 499,535 in 2020. In addition to production problems, Tesla needs to find enough global customers for its vehicles. As of right now, it leads the electric vehicle market. The International Energy Agency estimates that sales of electric vehicles might increase from approximately 11 million in 2020 to 145 million by 2030. If the current regulations are adhered to, Tesla is in a good position to gain from this projected growth. Conversely, in the upcoming years, legacy automakers will start offering electrified versions of their flagship models. This might make Tesla face much more competition. Its product attributes and brand image are its primary assets. Its highest-end EV versions now have the longest range. Tesla is focusing on boosting output, getting rid of bottlenecks, and extending battery life. The business anticipates rapid growth and is operating simultaneously on all fronts. In summary, Tesla has a chance to rank among the biggest manufacturers in the ensuing 10 years, even with the competition and obstacles. Taking a break from the narrative, I just wanted to note that, although it may seem unbelievable, I have been a supporter of Tesla for a very long time. I originally purchased the shares about 8 years ago, at a split-adjusted $30 price. I'm still with Tesla, and I've made almost 250% in profit. I think this stock has much greater potential. Returning to the storyline. In the incredibly lucrative EV sector, Tesla remains the market leader. The organization unquestionably offers the best items supported by state-of-the-art technology. In order to consistently keep one step ahead of the competition, Tesla also has a unique set of competitive advantages. Tesla is expected to surpass analysts' forecasts this quarter with significant potential for both revenue and earnings per share growth. The business recently posted impressive delivery and manufacturing metrics. As time goes on, Tesla's stock is expected to reach $1,000 by year's end or early the following year, even if another 2,500% surge in shares is improbable anytime soon. In addition, Tesla's stock may rise dramatically over the next several years. Up until the end of the previous year, 2020, Tesla had an amazing year. After that, the stock fell sharply, by 40%, to about $550. Following Esh is dedicated to staying ahead of the curve when it comes to EV innovation. Conversely, the majority of conventional automakers are still shifting towards electric vehicles while maintaining a primary concentration on cars with internal combustion engines. In summary, the market for electric vehicles is gradually overtaking the contentious industry for internal combustion engines, with Tesla emerging as the clear frontrunner in this regard. With 241,300 vehicles sold in Q3, Tesla has recently announced another record-breaking quarter for deliveries. This is a 20% increase over Q2 and a startling 73% increase over the previous year. In all, Tesla sent 230,202 Model 3 and Model Y vehicles, 92,750 Model S/X vehicles, and other vehicles to the general public. After accounting for leased cars, third-quarter sales of Model S and X vehicles were around 74,200, while those of Model 3 and I vehicles were approximately 218,104. In the second quarter of 2021, Tesla sold 187,163 cars for $9.874 billion, excluding leases. This sales graphic indicates that in the second quarter, the average selling price, ASP, for all vehicles was approximately $53,000. Roughly 1,550 Model S and X cars were sold by Tesla. Thus, the Model 3 and I category will cost approximately $52,000 if we assume an ASP of $100,000 to $110,000 for the Model S and X vehicle sales. Therefore, to estimate the number of Tesla vehicles sold in Q3, we can use an ASP of $105,000 for the 7,420 Model S and X cars sold during the quarter and $52,000 ASP for the 218,104 Model 3 and Y cars supplied during the same period. By the end of the decade, I think Tesla's stock should hit $250,000 or higher, continuing its steady and robust trend of EPS growth. It's possible that some market players may now claim that these stock price projections are excessively optimistic. These estimates, nevertheless, seem cautious to me. First, Tesla may have a bigger EPS than I anticipate in the upcoming years, and the P/E ratio of the company may continue to rise. Because of its distinct growth characteristics, I believe that only Amazon can be compared to Tesla. Roughly speaking, Amazon's current valuation is comparable to what a more developed Tesla valuation may be. By the way, I have put my Tesla price-to-earnings ratio for 2029 exactly at 58 times EPS, which is where Amazon is currently trading. Furthermore, relative to the number of years, the expected stock price appreciation is just 220% from current levels. This is a moderate increase. Of course, there are risks to take into account with Tesla. Even though I think the company can make almost $50 per share by 2030, its current price is far less than that amount. There